Hello, today is the 28th of January 2023. Let's do our disclaimer, go over our calls, make some predictions, and because it's the weekend, go over the long-term picture. Please follow the rules of my channel, and please remember my calls can be wrong, and any trade you make should be at your own risk. On Friday, we looked for the pattern with the early low, and Monday should also have the early low. We had an idea that we gapped down, which we did, and we had some price targets in the 40-30 areas, in the 40-31 area, and those did not print, so that's a miss. The optional target will forget, and then 4,031.24 will add to the list. It should be seen at some time. I said if we continued higher, we had a target of 4,083.49, which did print, and we crossed that off the list. During the day, this drop was called false by the MEJT system. It retraced. This drop was called false. It retraced. This long rally was called false, and that retraced also. So those have already played out. When you have a day-long rally and you're in an uptrend, you should really be able to hold it at the close, particularly on Fridays. Retail customers aren't inclined to go against the trend on a Friday, and they're probably not the one who had this big sell-off into the close, which undercut all these prior highs. So if that's maintained, and this will almost always follow through, these big drops on Friday. They'll almost always follow through and give us a lower open Monday morning. And that's a negative pattern. Doesn't mean you'll close lower, but inability to hold all these highs is negative and should lead to lower prices. Now it's possible we gap up because of the wall into the close, but that doesn't work as well on a Friday. We'll talk about what happens if we keep dropping, and we'll talk about what happens if we go up. We're on the verge of creating a golden cross and taking us to much higher prices. But if you look at the green letters, that's DeMarc's combo count. We had bar 13 print, but if we keep going up and print two more bars, we'll print a real bar 13. He doesn't require the last three bars to obey all the rules. And that's why we got this right at the high here. But if we keep going up, which I'm not saying we will, we should print two bars for real and give us another bar 13, which could mark a short-term top. But I'm not certain that's going to happen. Here's our long-term count. We've completed the big ABC, which is taken over 20 years, and from a long-term perspective, in the years to come, we should get much higher prices and go to new all-time highs over the next few years. But that doesn't mean we go up on Monday. We still have this possible target here of going back to this line, but I don't think that's going to happen. Let's look at some counts and see why. We've completed wave 1. We've completed A. This is a three-wave pattern. So if that's the right count, as I believe it is, at some point we should end wave red B and have wave red C. Now let's put a few numbers into perspective here, as we'll see. Let's assume that this is the end of B here, and I'll make the case for that in just a minute. If wave red A and wave red C are equal, and if this is the high, we're going to drop from the high 4,000s into the middle 3,700s. If in fact that happens, and if that's the end of wave black 2, black 3 is often 1.618 times wave black 1, which is 1,000 points. So let's remember that if the top here, it's plausible to drop 300 points and then rally 1,000. We'll come back to that later. So what's the chance this is the high? Well, here's the count we showed on Thursday. We have A, we have B at your good fib retrace. And wave C at the high was right at the 61.8%. And that makes it a plausible candidate for the end of wave C. And what's also interesting is if you look at wave C itself, you can have an A and a B and the C right at the 78.6. So you've got good Fibonacci wave balance here right at the high. And you've also got a rejection under prior highs, which is particularly telling on a Friday when it shouldn't be retail customers who are doing the rejecting. Now, when this price printed 4,083.49, it was the second of the 10 unsatisfied targets from 2022. This is a misprint. I don't know how long that's been there. 2022. Now, if we drop 300 points, we're going to hit this target from December 22nd and find support there. And if we rally 1,000 points from here, we're going to hit all of our targets. So just because it makes a pretty picture doesn't mean it'll happen, but it would certainly make a pretty picture if that wave count was correct and we dropped 300 points and rallied 1,000 over the next few months. Personal business, I have some early next week. I'm not going to have as much time to analyze things. I'll do my best. Monday's pattern has the early low. We could still gap up. Typically, it's a rally day with a high in the final hour. If it's weak instead, more weakness should follow in subsequent days. Inability to hold intraday highs at Friday's close is bearish. We should get follow through on the downside at Monday's open. Of course, if we gap instead and overtake the high day, the whole idea is killed. Won't know that until Monday. Friday's high is a reasonable target for the end of this leg, which is wave B of 2. The volatility index is at an extremely low level, which indicates excessive optimism among option traders who tend to be wrong at significant turns. And when the VIX is that low, in terms of time, we should be close to a top. So if the count is correct, this is a great place to find the high for this leg. And one plausible consequence would be a drop down to the middle 3700s, followed by a 1,000-point rally, all in a relatively brief period of time. So we might have some great opportunities here. But I take things a day at a time. This is a candidate for the end of the leg. If it is, we'll drop 300 points. And if it's not, the next higher price I have is around 41.82. Monday's pattern has the early low, and that's today's call.